In 2025, the side hustle isn't just a trend, it's a lifeline for millions of Americans. What once started as a way to earn a little extra cash has now become a crucial part of daily life for people from all backgrounds and age groups. With inflation and rising costs, secondary income streams have become essential for covering basic expenses like rent and groceries. Many families now depend on these extra earnings to bridge the gap between paychecks, ensuring they can keep up with bills and unexpected expenses. Over a quarter of U.S. adults now have a side job, and nearly 40% rely on that extra income to make ends meet. This shift is reshaping the American workforce, as more people juggle multiple roles to secure their financial future. The gig economy is no longer a fringe movement, it's a core part of how Americans work and survive. From food delivery to freelance design, these jobs offer flexibility but also demand resilience and adaptability. From teachers driving rideshare after school to parents running e-commerce shops from home, side hustles span every industry and skill set. People are finding creative ways to monetize their talents, hobbies, and even their spare time, turning passion projects into real sources of income. Digital platforms have made it easier than ever to start earning, democratizing entrepreneurship for people from all walks of life. With just a smartphone or laptop, anyone can tap into a global marketplace, find clients, and build a business on their own terms. But with this boom comes new scrutiny. The IRS is paying close attention to side hustle income. Tax rules are evolving, and it's more important than ever to keep accurate records and report all earnings. The days of unreported under-the-table earnings are fading fast. Increased digital tracking and new regulations mean that every dollar earned is more likely to be noticed by tax authorities. For today's side hustler, success means not just earning more, but understanding and meeting your tax obligations. Staying organized and informed is key to avoiding costly mistakes and penalties. Navigating this new landscape is critical for long-term financial security. Planning ahead, setting aside money for taxes, and seeking professional advice can make all the difference. Let's break down what you need to know to thrive in the side hustle economy, so you can turn your hard work into lasting financial stability and success. The IRS has gone digital, transforming the way it tracks and monitors income across the country. No longer limited to paper trails and manual audits, the agency now uses cutting-edge technology to keep tabs on taxpayers, and side hustlers are firmly in its sights. Whether you're running a small online shop, freelancing after hours, or just selling crafts on weekends, the IRS is watching. Using AI and advanced data matching, the agency now cross-references payment data from platforms like PayPal, Uber, and Etsy with your tax return. These digital tools can quickly flag discrepancies and spot unreported income that might have slipped through the cracks in the past. Even income from TikTok, YouTube, and Instagram is tracked, brand deals, affiliate links, fan donations, and more. If you're making money as a content creator, every dollar is now on the IRS's radar. Free products, sponsorships, and promotional gifts all count as taxable income. The value of those freebies you receive for reviews or social posts must be reported, just like cash payments. Third-party platforms are now required to report your payments directly to the IRS, creating a digital paper trail that's nearly impossible to erase or ignore. This means the IRS often knows about your side hustle income before you even file. You might get a notice or a $1,099K in the mail, sometimes before you realize you've crossed a reporting threshold. Ignorance is no longer an excuse. If you're earning money online, you're expected to report it. The rules are clear, and the digital footprint you leave behind is easy for the IRS to follow. The agency is investing heavily in technology and staff to ensure compliance. With more resources than ever, audits and automated checks are becoming more common. For millions in the gig economy, this is a game changer. Your financial activity is more visible than ever. Every ride, delivery, or freelance project leaves a digital trace. Accurate reporting is now essential to avoid trouble. Failing to report even small amounts can trigger audits, penalties, or worse. Understanding this digital dragnet is the first step to staying out of the IRS's crosshairs. Staying informed and proactive is your best defense in this new era of tax enforcement. The new Form 1099K rules are a game changer for side hustlers in 2025. Now, if you receive $600 or more in payments for goods or services through platforms like PayPal, Venmo, Etsy, or Uber, you'll get a 1099K, and so will the IRS. This form reports your gross payments, not accounting for expenses or refunds. Many mistakenly think, if they don't get a tax form, they don't have to report the income. That's false. Reporting is always required. The $600 threshold doesn't change what's taxable. It just makes tracking easier for the IRS. Be sure to distinguish business payments from personal ones. Misclassifying income to avoid a $1,099K is tax evasion. Most payment apps now require you to label transactions as goods and services or friends and family. If you're running a side hustle, make sure your clients use the correct option. The bottom line, every dollar you earn is on the IRS's radar. The IRS's definition of taxable income is surprisingly broad. If you're paid for your work, it's considered taxable, no matter how you receive it, or what form the payment takes. Whether you're earning a regular paycheck, getting paid in cash, or receiving goods and services in exchange for your efforts, the IRS wants to know about it. This includes income from freelance gigs, side hustles, cash payments under the table, online sales, and even barter deals. Like when you get free products in exchange for a review or social media post. If you're an influencer, a gig worker, or an online seller, all these sources count. Cash is not invisible to the IRS. Failing to report it can trigger audits, penalties, and even interest on unpaid taxes. The IRS uses sophisticated tools to track unreported income, so it's risky to leave anything out. For online sellers, your gross sales, before expenses, count as income. For creators, sponsorships, affiliate commissions, ad revenue, and even tips or gifts from followers all qualify as taxable income. Even non-cash compensation like a laptop or camera you receive for making a promo video is taxable at its fair market value. The IRS treats these items just like cash. The payment method doesn't matter, whether you're paid by cash, check, direct deposit, or digital wallet. What matters is whether it's compensation for your work or services. That's why meticulous record-keeping is essential. Keeping track of every payment, no matter how small, helps you stay organized and prepared for tax season. Don't rely solely on 1099-S or other tax forms. Track every dollar you earn, from checks to cash to digital payments, so nothing slips through the cracks. The IRS expects you to report all income, regardless of the source or how you received it. This includes money from side jobs, gifts for services, and even barter transactions. Responsible self-employment starts with understanding what counts as income and making sure you're reporting everything accurately. Keep detailed records, stay organized, and you'll protect yourself from costly mistakes and stay compliant with IRS rules. Staying tax compliant as a side hustler doesn't have to be overwhelming. First, set aside 25–30% of every payment for taxes. Unlike W-2 jobs, no one withholds for you. If you expect to owe over $1,000 in taxes, you must make quarterly estimated payments to avoid penalties. Use Form 1040 ES or tax software to calculate what you owe each quarter. Keep meticulous records of all income and expenses. A simple spreadsheet or bookkeeping app works wonders. Separate your business and personal finances with a dedicated business bank account. This makes tracking income, expenses, and deductions much easier. Consistency is key. Update your records regularly, not just at tax time. Good habits now mean fewer headaches and less risk later. Staying organized is your best defense against IRS trouble. The tax code lets you subtract legitimate business expenses from your income. These deductions are your best friend. Deductible expenses include business mileage, a portion of your phone and internet, supplies, software, marketing, and platform fees. The home office deduction can be valuable if you use a space exclusively for business. You can use the simplified method, a set rate per square foot, or actual expenses. But the space must be used only for work. Keep receipts for every deduction. Guessing or estimating is a red flag for audits. Not everything is deductible. Commuting costs, personal expenses, and non-business clothing don't count. Only claim expenses you can document. Knowing the difference between business and personal costs helps you maximize deductions without crossing the line. Smart deduction strategies can significantly lower your tax bill. Stay informed and organized to make the most of what the tax code allows. In 2025, side hustles can start small and scale big. A $500 investment in thrifted goods can turn into $2,000 a month on eBay or Depop. Freelancers with in-demand skills can launch with just a laptop and Wi-Fi. Meredith Pierce, for example, turned her passion for travel into a business organizing group trips for solo women, charging up to $1,600 per person. Some side hustles like Actual Veggies have grown from kitchen table ideas to multi-million-dollar companies. The common thread? Identifying a need, taking action, and managing the business, including taxes, diligently. Whether you earn $1,000 or $1 million, tracking income and expenses is non-negotiable. Every successful side hustle is built on both creativity and compliance. Ignoring your tax obligations is a costly gamble. The IRS's automated systems quickly flag mismatches between reported income and what platforms report. A CP 2000 notice can hit you with extra taxes, penalties, and interest, even without a full audit. If you're audited, you'll need detailed records for every dollar earned and spent. Penalties can reach 25% of unpaid taxes, and interest compounds fast, turning small debts into big problems. The IRS offers payment plans and relief programs, but qualifying isn't easy. The best strategy? Stay diligent and honest from the start. Responsible tax habits protect your side hustle and your financial future. Success in 2025 means working smarter, not just harder. Use tax software like TurboTax or TaxSlayer Self-Employed to handle complex freelance returns. Bookkeeping apps like QuickBooks Self-Employed or FreshBooks automate tracking and make tax time easier. If your business grows, consult a tax professional for personalized advice and planning. Treat your side hustle like a real business. Keep records, stay informed, and leverage every tool available. Watch for new tax breaks, like the expanded qualified business income deduction coming in 2026. With the right tools and habits, your side hustle can be a powerful engine for financial growth, not a source of tax stress.